how to bag your 100x. Yes, today's video is about selling and profit taking. To sell at the top and not hold. Did you know in 2017, most people that made a killing held on to most of their bags all the way down to the bull run, up to 90% of individuals, because they had no methodology on how to sell near the top. Today, I'm going to share with you one of my top secrets on how you can project in advance where the top is likely to be and sell. And the two examples we're going to use is Velas and Decentraland. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008. Where I used to focus exclusive on currencies, but now it's all about cryptocurrency. So let's dive straight in. So I did a video on Velas, on what day was this? This was on the 21st of November. So today is the 3rd of November. So 3rd of December, right? So what's that? It's like that's like 2 weeks ago, right? And what we said with Velas. Now, I'm using Velas as the example on how to project the top in advance, whether it's a very high cap. Velas is moving into top 120, top 100 coin, and there's a lot of volume going into Velas. We know Velas Pad is launching projects on the Velas chain. It's fast, it's built off Solana. That's the fundamentals. But we're looking at pure psychology of buying and selling. And what we said in this video, if I can pull out my annotation laser so you can see this, we said this 5-wave structure, 1, 2, 3, 4, 5. I'm gonna dive into this because you need to know this. You have to know this. You're missing out if you don't. When we hit these price zones with momentum, it's inevitable, highly probable, because we can only do probabilities and never certainties, that we're gonna get a correction. And look what happened. Look at this. This is the live chart of Velas as of today. And look, bang, right? So we said this 2 weeks ago. Not guaranteed, but it bang on hit the projected price zones. We said it in advance. We had this bearish momentum reversal down here on the momentum. And we said expect it to come down. And do we think it's finished? Well, we're going to go into that. But the main thing is we can definitely see there's a trend reversal, right? The price has come clearly down. So the thing I wanted to focus on today is a couple of things. We're going to jump into Decentraland as well. And I'm just using them as examples, but it applies to all crypto. And 60 to 70, 80% of the time, these patterns unfold. And when they do unfold, we want to use that information. So I want to just pounce into this lesson here. This is just I use this to teach a lot of my students, right? So you got Elliott waves, right? If you're not familiar with Elliott waves, markets move in these 5-wave sequences. 5-wave sequences, and it's so important to understand. Now, it doesn't mean they're always going to move like this. Sometimes it's not as clean as this, but often, like you saw with Velas, is very clean. 1, 2, 3, 4, 5. But what Ralph Nelson Elliott, so this is called Elliott waves, Ralph Nelson Elliott figured out in the 1800s, 1800s, way before you were born, before I was born, that the markets move in these wave sequences, and there's waves within waves. And when you see a 5-wave sequence, 1, 2, 3, 4, 5, there's a degree of count that's above this one. And what we call that is a wave 1 or wave 5 of a wave 1, right? So this, by the way, I'm going to cover some stuff and it might go a bit over your head because everything is difficult before it's easy. So if you haven't already, take my free Elliott Wave and Fibonacci Masterclass where I break this down into more detail. And I've actually got a course which breaks these down into 5-minute lessons. I'm going to cover that at the end as well because I want to make sure you know it's available because many of you're into this. If you're into this, you need to learn this. So what typically then happens is a market moves in an ABC correction. I'm showing this for a very particular reason. And then after this, because this is a great buying opportunity. When you see these wave 2 lows, often markets are crying. People are pessimistic. There's maybe some negative news, but the project itself is phenomenal. Like Cross Wallet is in this position right now. AstroSwap is in this position right now, right? And we know A, B, C corrections are healthy. If you saw my video on NFT launch, it did an A, B, C correction, went to 0.048, so it was like 4.8 cents, and then it just did this nice explosion to the upside. And this is what we've seen with Velas. But what we're looking to do, and I'm gonna cover it like this, because this is more about business planning. It's about exit strategy. It's not just about doing the technical analysis for the sake of doing technical analysis. Often, this wave here, this wave 3, has a direct relationship with this wave 1, right? And this is what the relationship is. I cover this in the masterclass, but I want to just kind of cover some extra points today. So this here, this wave 1, has a relationship to this wave 3, a dynamic relationship. And the most common relationship is if we measure this wave, how much movement there was, and then we project it forward and multiply it by 1.618. This is the golden mean. This is a Fibonacci ratio that applies in all parts of nature, many parts of nature, but it also applies to the psychology of the markets. And then there's another one called 2.618. These are the typical ratios for a wave 3. And then these waves within the waves also have a direct relationship, and we can project with high probability of when this wave is likely, highly probable, coming to an end. And that's when you need to consider taking profits, because wave 4 tend to happen and then wave 5. So you need to have a plan in advance. Are you the kind of person that wants to sell at a wave 3? Wave 3 is a good place to sell because wave 4 is a classic or profit-taking wave. It's a profit-taking wave because people that are bought in down here and here, I made some really good gains. Really good gains. And we want to make sure we're taking profits. So what's some logical, easy, mechanical, non-emotional ways to take profit? So it depends on when you're buying. So if you're buying like IDO, before there's any price data, you're buying like literally down here. So this might be a good first kind of phase to kind of read the market for this. But markets are always expanding and contracting. The evolution of a project is expanding and contracting. It's growing, it's maturing. It's, Bitcoin is going from an idea, 2009, people don't really know what it was. And then in 2013, then 2015, it was really kind of taking some really good price action. And then 2017, it was a whole different ball game. And now in 2021, whole different ball game. It's legal tender, but it's expanding. Number of wallets is increasing. Number of market cap. The market cap has gone over well over $1 trillion now, and the whole market of crypto has gone over 3 trillion. I know it's roughly around 2.5 at the moment, give or take. So what I'm saying is, we want to have logical exit points. So what I tend to teach my students is, you want to get risk-free. If you're buying on the open market, it's not IDOs. IDOs, you can get risk-free. You can let the project do a 50x, 100x, because you're getting in at such a low market cap. But if you're just buying on the open market, a 3x, so 3 times multiple to a 5 times multiple is a good point to get risk-free, right? And you can keep that mechanical very, very easy. And then for your second target, depending on the project, depending on how young it is, if it's got the potential to do a 50x, 100x, 200x, is choose your number. So let's just say we said, right, we're going to be quite conservative. In crypto land, this is quite conservative if you get into a low market cap project. And our second target is 20x, which is 2,000%, right? 2,000%. And let's just say 2,000% is up here, right? Hopefully you can see that up here. This is our 20x target. But let's just say this pattern unfolds, 1, 2, 3, 4, 5 over wave 3. We might be able to see that it's unlikely that it's going to hit this 20x. It might just top out at 18x. And you want to be in the position to make a logical, mechanical business decision to say, okay, it doesn't look like it's going to reach 20x. I'm going to use Velas as an example. So we make a business decision and say, actually, now that the waves have unfolded, we can see it's likely to only hit an 18x. So then you exit 2, which might be to sell. This is my writing with a mouse. Sell 1/3, happens at 18x. Hopefully that's making sense. The main thing is that you have a written plan. And like any business, we're in the business of trading and investing, and it's probabilities, never certainties. And sometimes when the information is this clear, and I'm going to, again, jump back into Velas in a second, this clear, that it's looking like it's going to top out, and then we're going to go for a correction, then you can go, actually, let me just change it. And the flip side could be true. Let's just say this is where 20x was. Let's just say you got in really, really low down here, and this is where 20x was, and the market's moving, and it's only done a 1, 2, 3. Well, you can say, well, actually, we know markets tend to move in 5-way sequences, so we can allow it to do a mini correction, and then wait for this part, and this might end up being a 30x. So you can kind of move to the markets and stay flexible, right? Very, very important. By the way, I know if you haven't done Elliott Wave and Fibonacci before, it is one of the most powerful things when it comes to crypto. Why? Because crypto is unusual, because we're seeing price action and price data for young projects. Normally, there's only price data available for mature projects in the centralized world. IPOs, stock exchanges, commodities, forex, etc., etc. Whereas crypto a lot of these are young projects, less than 10 years, less than 5 years, some of them 3 months, some of them 2 weeks, and the price data is quite raw and the psychology is quite raw, which means the speculation is higher, which means the human psychology is higher. And what is this measuring? This is actually measuring human psychology via buy and selling price action. So if we just get rid of this, so now let's just jump back into Velas, right? So this is Velas. So what we did, literally, like I want to kind of keep making reference to this. Like take a snapshot of this, right? Think about this. One wave, because I'm finding most people are not getting it. And if you get it, it gives you an edge. And if it gives you an edge, it means the probability of you making money increases. We said we've got this wave 1, a wave 2, and a wave 3. And then within this wave 3 structure, we got a 1, 2, 3, 4, 5, right? Velas was textbook, absolutely textbook. In fact, I'm going to keep this drawing on, right? Let me keep this drawing on, because when I move back into, if it lets me, does it let me? Yeah, here we go. I'm going to keep this drawing on, right? But look at this, Velas, right? So this over here, I'm going to draw it like this and see if this works. So this actual price action wave 1 is what we drew here, wave 1. And then we had this correction, wave 2. That's what this is down here, wave 2. And then we're anticipating this wave 3, which is what this looks like, a wave 3 for Velas. But within the wave 3 is this structure. This is what we drew in the red line, 1, 2, 3, 4, 5, which is the theory. But look at this. 1, 2, 3, 4, 5, right? And when this applies, it's like magic, but it's human psychology being measured. People figured this out over centuries ago, like in the mid 1800s, 1900s. And with crypto, I find it works exceptionally well. And what we're using is Fibonacci ratios, these ratios that apply in nature, time and time again in human nature. But what Ralph Nelson Elliott figured out was that it also applies to human psychology, fear and greed, how people are feeling when the price really moves up, how people are feeling when the price really moves down, and how that actually indicates what the human behavior, the buying and selling behavior is going to be. So now let's get rid of this. So what am I really saying here? Well, what I'm saying here is when we look at the video I did, and it's worthwhile watching this video on November 21st. November 21st is called Velas. Velas. Let's have a look. Build up your crypto while you wait for the big moves. Bonus head spins. Oh, sorry, I did some head spins in that video. All right, but the whole video was about. It was actually, I don't think I made it that clear. With Velas Pad, which is a Bluezilla launch pad. By the way, I got an IDO course ready for you now. It's in the link below. It's an IDO masterclass. It's in the link below. But with the Bluezilla launch pad, Velas Pad, you actually get your rewards in a VLX. You stake your tokens and you get VLX tokens. And a lot of my students were staking tokens down here. Like I'm doing today's video like this because I want to take my time and getting this across. A lot of my students were getting lots of tokens here with the Velas Pad. And then as the price was moving up, I was like, okay, it's reaching this zone. So you should consider selling your stake tokens. And they were giving some really good rewards, APYs, with Velas. But watch this video, because what we say is really, really clearly, it looks like there's 1, 2, 3, 4, 5. There's these Fibonacci ratios. That's what these lines are. I cover it in my masterclass. I then give you a course on how to do this. In fact, if you don't mind, I'm going to show you my course, because I just want you to know that it exists. Because people find it's not, everything is difficult before it's easy. I think I brought it up. Yeah, if you take my Elliott Wave and Fibonacci masterclass, you have the opportunity to buy one of my courses. They're discounted heavily right now. But the course, I've spent endless amount of hours to simplify this. And I've broken Elliott Wave down into bite-sized chunks. And if you buy my course, you actually get an invite into my private Telegram group where you get premier access to all my YouTube content, and we do some other bonuses as well. But anyways, when I click into this course, what I've aimed to do is break it down to Elliott Wave Foundation, which is really the high level thinking and retracements. The pattern. Sorry, Fibonacci is the retracements. Elliott Wave is just the basic Elliott Wave rules, guidelines. Elliott Wave basics, the rules, the guidelines, and then in the intermediate level, we go into the macro, intermediate, and micro. What that means is there's waves within the waves. So you have to know that there's waves within the waves. And then we cover more rules and guidelines, the 3 Elliott Wave rules that you need to know. And then the advanced is there's different types of corrections, and it's just to be aware of these types of corrections, what's most common and what really tends to occur. And then we cover some examples, so it's really, really practical. But my favorite part of this course, and I'm really passionate about Fibonacci ratios, I think it's just magical. It's like magical, but it's human psychology, and it just plays out. And what I've done with this is I've broken down step by step in 5-minute lessons, Fibonacci, what is it, the foundation. So this is where the retracements is. Then we go into the intermediate level, bite-sized chunks, which is going to be all about external retracements. Yeah, the relationships with wave 2s and wave 3s, the relationship between wave 4 and wave 5s. There's a really beautiful relationship. The relationship between wave Bs and wave Cs, right? Really, really beautiful. And then there's Fibonacci extensions. This is advanced, but it's really measuring the relationship with wave 1 and wave 3. It's what we're looking at in Velas. So let's just wrap up with Velas, right? So I just want to, because I'm harping on about this because I just want to make sure you know how powerful this relationship with wave 1 is, what we use to get this number here, 2.618, which is a typical maximum wave 3. And look, it just tagged like this area here, it tagged it beautifully, and now we're seeing this correction. And now what we're seeing with this correction is, how do we know it's a correction? Well, there's this secret that I know, and I'm going to share it with you. Do you want to know it? The secret is this: something called an overbalance in price. Something that W.D. Gann used to say, one of the forefathers of technical analysis. He's an 1800s guy as well. If you look at how deep this correction is, which is called a wave 4, and then you look at how deep this correction is, wave 2, they kind of equal each other, which is relatively common in terms of price. But this correction that we're seeing right now is bigger. So that's what you call an overbalance of price. The move to the downside is bigger than any other previous move to the downside in this wave sequence. And that's one of our first major indicators that this is a reversal. Yeah, very, very important. So now let's just finish up. So today was more about taking profits, right? So we're not going to do a deep update on Velas. We just know that we projected a correction and it happened. But you should be using this information for all your crypto positions, because sometimes the position is in a wave 2, and it might feel a bit scary because you saw a wave 1 peak and it's gone down 30%, 40%, 50%, 60% maybe. And you might be kind of feeling a bit uncomfortable, especially if you bought near the top and you're running at a bit of a loss. But what you should be anticipating and projecting forward is what's the most typical and common for good projects with volume and just human psychology is a wave 3. And the price target should be a 1.618 to a 2.618. So Decentraland was another one that I just wanted to bring to your attention. If it loads up, let's have a look. This is a video I did. Here. But is this Decentraland? Yeah, this is. You can see it almost looks identical to Velas, right? But this is what I mean. These patterns are identifiable in advance. And this video was done on the 13th of November, and I said Decentraland is exploding because it was just trending, right? Facebook changed its name to Meta. Anything to do with metaverse, just it was exploding. And it says the most searched crypto right now, but is it the right time to buy? And really, you want to know, is it the right time to buy or is it the right time to sell? And just purely based on, I love Decentraland. I think it's phenomenal. I think it's going to make higher highs. I think it's just going to be, it already is a powerhouse project, right? It already is. But it's just going to go to new levels. But putting that aside, that's fundamentals. What about the psychology of buying and selling right now? What does it look like? Well, to me, when I looked at this video, and I clearly say it in the video, so I highly recommend watching it because we did this in advance. This is, you got to remember this. We're not just going back in hindsight. We said, look, this looks like a wave 1, a wave 2, and then there was this explosive movement here. This explosive movement. I'm like, wow. But that's so like it looks like a wave 1, a wave 2, an explosive wave 3, looks like a wave 4, and we should anticipate a wave 5. And these are the typical wave 5 price zones. It might overextend, and then we should expect a wave 4 correction, which should be similar to a wave 2. Right, that's what we was really, really looking at. And then when we go into the Decentraland live chart, if I can pull up the live chart, let's just, I want to keep the drawings for a second. Let's just see if I can go to this. Yeah. I'm going to go to a live chart. Let me pull up a daily chart. Wi-Fi is a bit slow today. Okay, here we go. Let's just pull up this live chart. So this is the Decentraland. It's still taking a second to load. Jeez, Wi-Fi is slow today, isn't it? There we go. Here we go. Bang. Right. So what we're looking at here is like this. This is what we're saying. So now this part of the market, this part, this correction that we was anticipating, I'll get rid of this drawing now, is what seems to be happening right now, right? Okay, it's not confirmed, but what do we know? What information do we have? Because again, we can only do probabilities and never certainties. But again, look at this. We said, look, it's looking to top out. It's overextended a bit over here, but you can kind of see it's in that zone. So now we can go, this looks like a wave 5 over wave 3, and we should anticipate a wave 4 correction. But what can we see as a big clue? Well, there's a few things, but the main thing is that even this initial move to the downside looks quite impulsive, but it seems to be definitely bigger than any other correction here, and it's matching this one here, right? So we know the probability that this is a correction, and we should anticipate a wave 4 now. Because profit taking, like think about it. People that was holding Decentraland from down here, especially from down here, and then there's this amazing explosive move. The most natural thing to do is say take profits. So wave 4 is the profit taking wave, right? So anticipate that. So this is earlier than Velas. It's not guaranteed it will do a correction, but this initial move to the downside looks like the beginning of a correction. So when we did this video, the main message was now is probably not the best time to buy because the upside potential with probability is medium to low. In fact, it's low, mainly because the big moves already happened. So now is the time to be considering taking profits. So this is what I was talking about. This was like profit levels. So even if you sold roughly around here, hey, this is good profit, especially if you're bought in down here. What was the price? It's like, 80 cents to $5. So it's like 5-6x, right? 5-6x, 5-600%. If you bought down here, this was like 20 cents to up here, which is more like a 20-30x, right? Good profits, especially if you got good amounts of money in this. And if you bought really early, like before any of these movements were taking off, like really down here, which many people would have, like at 10 cents, and even just a little bit lower goes very fast of 5 cents. 5 cents to $5 is 100x. So a lot of people sitting on 100x that was in Decentraland before it really started to take off in January this year, right? Because Decentraland's been around for a little bit. So we go, okay, so what are we looking for? So you are looking to be in these positions, ride this wave 1, become risk-free, be comfortable with wave 2s. They tend to be a deep correction, and then ride the market for a wave 3. And when you're at wave 3 high, typical is these, this. I drew this in the video. It's worthwhile watching. The two typical is 1.618 and 2.618. And we don't know which one it's going to be. But this is the typical, but it overextended, and it even overextended above the overextended price target, which is normal because of the hype. Metaverse, massive hype. Facebook changed its name to Meta. So Metaverse is going to really, really kind of or it already is a big thing. It's a really, really big thing. So let's wrap up, right? Because I know I'm looping the same message. I'm hoping you're hearing it. And if you're not familiar with Fibonacci and Elliott Wave, take my free Elliott Wave and Fibonacci Masterclass because I covered the basics. And I cover it at a good level, and we could do examples and everything else. And if you want to learn how to do it, you can take the course. They're at a discount at the moment. But I just want to, you should have a business plan that should be, let's just say you want to get in quite early. You want to be risk-free, with a 3, 4, 5x. With younger projects, I mainly focus on younger projects, under 10 million or under 20 million market cap. And then have your second and third exit so you can ride the wave towards the top of a wave 3. Yeah. And if your plan, again, you have to decide this. What typically happens afterwards is a wave 4 and then, a continuation, which is a wave 5, which tends to be something like this. But I like to exit most of my positions at an aggressive wave 3 like this. So there you have it. There you have it, people. Anything else needs cover? I don't think so. So today was how to bag your 100x. Like, how do you sell? Because if you don't sell at 100x because of FOMO, fear of missing out. Jigir, this is common comment out here. Jigir, I'm up 20x, 50x, 100x. Do I sell? Do I buy more? Do I just wait? Do I sell half? Do I sell this? Do I do this? I go, that person has already lost. Why? Because you should have made those decisions before you even buy. The real secret is treat every cryptocurrency project that you're buying as a mini business, and you write a mini business plan. Nothing too sophisticated. Leonardo da Vinci says it best. The ultimate sophistication is simplicity itself, or simplicity is the ultimate sophistication. So you might say something like this. Let's just use Cross Wallet as an example. Today's price is, I don't know, 15 cents, right? And we compare it to Trust Wallet and we go, okay, 20 million market cap right now, roughly. And Trust Wallet is 400 million market cap. Okay, that's a 20x. 20x. So we go buy Cross Wallet today. Simple, easy, right? Done. Exit, risk-free, exit 1, 3x. So it means today's price, let's say it's 15 cents, times 3 is 45 cents. If and when it hits 45 cents, we sell a third. This is before you even buy. Exit 2, okay, we anticipate a 20x. So therefore, at 10x, we sell another third of our tokens based on the original amount purchased. And then exit 3 is either a 20x or we make a judgment call based on logical information on an Elliott Wave pattern. And if it looks like it's going to overextend way beyond 20x, we adapt and we say, all right, 30x. If it looks like it's making a 5-wave sequence and it's not going to quite reach a 20x, we make a judgment call and say, oh, doesn't look like, because the wave 3 typical extension is, let's say it was an 18x. We go, right, 18x, which is what, $1.50, around $2. We go, bang, we sell at 18x. But then that's your business plan. Easy, simple, logical, mechanical, objective. If you have none of that, you're going to be an emotional wreck because of fear of missing out, fear, uncertainty, and doubt. It's just human nature. If you've made a 50x and you have no plan, half of you is going to go, wow, let's let it ride for another 50x, like double again. Other half is going to be like, oh my Lord, this is good money. Sell, 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 take profits. Both are wrong. Why? Because you want to have the plan ahead of time. And then when those price targets are hit, bam, you just pull the trigger. Then you're able to manage a portfolio of 10 positions, 15 positions, 20 positions with decent allocation to each one. So hopefully that makes sense. And by the way, take my free Elliott Wave and Fibonacci Masterclass. It gives you this skill set to see what others can't see. Most people are just seeing random price data. You'll be like Neo in the Matrix, seeing things beyond what people are seeing. And you go, okay, it looks like it's coming towards a wave 3 high. So now I can think about taking profits. Or, okay, the price has gone up, but it's nowhere near a typical 1.618 wave 3. So why am I even considering selling? My price target is 1.618. Bang, that's it. Yeah. And again, we do probabilities and never certainties. So today was more of almost like a mini masterclass in itself on how to take exits and profits like a pro. 100x's on paper is all great, but can you sell? Do you know how to sell? Do you know how to do that? And business plan is going to be the main thing. All right, let's wrap up. Let me know how you found today's video, by the way. It's a bit different, but I know I just want to get this lesson across because I'm listening to your YouTube comments, my private Telegram group. I'm listening to people and I'm like, okay, this is the time where we need to be aggressive because most of the money in your portfolio will probably be made in the last 20% of the bull run, and we're moving into that last 20%. But this is also the time where you need to be aggressive and defensive in terms of becoming risk-free in a disciplined manner and taking profits at your price points based on your business plan. And your business plan is going to be different from my business plan because both of us are two different individuals and we're buying at two different price points and so on and so forth. All right, let's finish with the classic quote. Is irrelevant. You know what it is. Rule number 1, never lose money. Rule number 2, never forget rule number 1. Who is it? Warren Buffett, right? So even if we think it's going to do a 20x, 50x, 100x, 1000x, hey, still get risk-free, right? And IDOs is a different type of business plan because with IDOs, you're looking to get like Dragonland on Coinstarter. I think it did a 29x, but the allocations were juicy. And by the way, I've added Coinstarter to my IDO masterclass. If you haven't taken my IDO masterclass, is in the link below. I haven't added it to the masterclass. I've added it to the course. When you do the masterclass, you can buy the course afterwards, which kind of has a step-by-step. And now I've added Coinstarter to that because I think they're going to be, or they are. They're on the Bluezilla level, but undervalued right now. Well, in fact, I think the price went up the other day. I think it went up 50%, but I think it's still very undervalued. They're going to be a powerhouse. I can tell their level is great. But what I was gonna say, I lost my train of thought. The main thing is take your time, keep sharpening your axe, learn the basics. You don't have to, everything is difficult before it's easy, but just learn the basics. Take the free Elliott Wave and Fibonacci Masterclass. If you can, get the course. But even if you just watch the course, don't get too over analytical. You don't have to be like my level on it because I've been doing it for 15 years, but you just get a feel for it. So therefore, you can just be a bit more logical, more mechanical, and less emotional, and you'll do better for it. All right, I got to run because I got a meeting in 5 minutes. So I'll see you soon. Have a great week and keep up the great work.